Okay, our guest today has done more to legitimize crypto and traditional finance than just about anyone in the industry. He helped launch the world's first crypto index fund, he's testified before Congress, and he's built some of the most influential stages in investing, including the world's largest ETF conference. At Bitwise Asset Management, he's leading the charge to bring digital assets into the institutional mainstream, one meticulously researched fund at a time. He's also helped shape the future of AI-driven investing, chaired wealth festivals, and if there's a white paper worth reading, odds are he's already annotated it. Today, he joins us to talk about where we've been, where we're headed, and why Bitcoin might just be the most misunderstood innovation of our time. Please give a big blockchain report welcome to Matt Hougan, everybody. Oh, Matt! They love you, studio audience. Calm down, calm down. Oh, they love having you here, Matt. How are you? Glad to have you on the show.
What an intro. I love it. It's great to be here. Thanks for having me on.
Oh, the pleasure is all ours, Matt. You have had a really interesting career, my friend. I mean, your resume, it spans everything. I mean, we're talking early ETF journalism to running billion-dollar crypto portfolios. Did you always see yourself at the intersection of finance and innovation, or was this a gradual evolution?
Well, my first job out of college was as a minor league baseball mascot. So I'm not sure I always saw myself at the intersection of finance and tech, but it is the space that I love. I love new technologies. I love technologies that the world doesn't understand and appreciate. And I've sort of built my career by riding the wave of the world waking up to these technologies. First biotech, then ETFs, and now crypto. This is the biggest wave I've been on, and I think I'm going to be riding it for a while.
Incredible. No, I got to hear this. Baseball mascot? Like, what? Tell me about that. Like, I can't not ask. What was that
It's
about?
absolutely, yeah, man. I was the Portland Sea Dog, Slugger the Seal, 7-foot seal for the Double-A affiliate of the then Marlins. If you need someone to do the YMCA dance dressed up as a 7-foot seal, I'm your man. Don't look any further. I got it down. So yeah, that
Truly,
was. Sorry.
truly a man of many, many talents. I love it. So I want to talk, let's go back to the beginning, right after the seal mascot part.
Yeah.
What was the first investment that you ever remember making? And did it teach you anything that still applies to your investment strategies today?
Yeah, absolutely. I got started investing at the sort of height of the dot-com bubble. And so it was a company called JDS Uniphase, which was going up and to the right. And I was sure it was going to go to 1 million. I didn't understand it at all at the time. And sure enough, it did not go to 1 million. I learned a few things from that. One is a little bit of humility, right? Not everything goes up and to the right. Having a diversified approach to investing is key. Even today, right, I'm on the cutting edge of crypto, but our first product was an index-based product. Why? Because if I go back to 1999, if I had invested in the internet, I would have done great. Instead, I tried to pick the individual winner, and I didn't do as great. So I do carry a lot from that, but coming of age in the internet bubble sort of taught me that if you're aligned with technologies that are emerging, you may be wrong in the short term. There may be volatility in the short term, but the long-term trend is your friend. And so I've tried to align with that over the years.
That's awesome. I mean, that's so applicable today too, right? There's a lot of bad actors in this space, but if you're looking long-term and you're specifically looking on the Bitcoin front, it's kind of hard to not feel a lot of conviction in terms of where we're heading today, right?
Huge amounts of conviction. I think specific to Bitcoin, an incredible thing that's happened is we've removed a lot of the big risks to Bitcoin. We've removed the regulatory risk. We've removed the technology risk. It's now easy and cheap and safe to buy, and we still have a huge amount of upside. But absolutely, it is a lesson. You have to invest for the long term. You know, Amazon stock went down 80 or 90% a couple of times. And look at it today. It's a multi-trillion-dollar company. If you panic and sell at these bottoms, that's where you get in trouble. Just hold for the long term. I only buy Bitcoin. I don't sell it. And that's what I'm going to be doing for the next, handful of years.
You and me both, brother. Love to hear it. Now, during your journey, right, it's been an interesting one as an analyst, a CEO, a conference chair, and now the CIO of Bitwise. Has there been any part of your individual professional journey that has been a surprise to you? Are you sometimes just like, how did I get here? Or was this all part of the plan from the get-go?
It wasn't. It's all a surprise to me in that I'm continually doing new things, continually learning new things. I think the thing that's been really successful for me is, again, what I mentioned at the top, which is society has this natural skepticism toward new technologies and innovative things. I was a biotech analyst first. Society was very skeptical of biotech, but if you looked at the underside of the science, you could see that it had huge potential. That was a good bet. When ETFs were launched, people were skeptical of ETFs. But if you looked at how the technology worked, they were better, faster, cheaper. The same thing is true in crypto. So there's been this sort of unique career hack, which is new technologies are looked upon skeptically. And over the short term, they can run into wrinkles. But over the long term, they've been hugely successful. And so I've done that time and time again. I'm on the board of an AI-driven investing company. For a long time, that was out of favor. Now it's very much in favor, and people are excited about that. So aligning with technology and jumping over the skepticism that traditional investors look at new technologies with can be a good way to build your career.
Yeah, and you talk about this skepticism involved. And of course, that must have existed for you, as it does for everybody at some point during their own journey in the cryptoverse. Was there like a specific moment that convinced you that crypto wasn't speculative noise, but was actually the next real chapter in financial markets?
Yeah, let's talk about the speculative side, or the skeptical side. I was running ETF.com. I had a team of very smart young analysts. We did an hour-long meeting on Bitcoin the day it crossed $1 in February of 2011. I was a little too skeptical to rush out and buy it, but boy, do I wish that I did. There was a very specific moment for me, which was in 2013. We actually had the Winklevoss twins down to speak at our ETF conference, and their lawyer, who was this legend in the ETF space, took me aside and said, "Matt, this is much more serious than you think it is. This is a really big deal." And the fact that it was someone that I respected and who had credentials in the broader financial industry, who specifically wanted me to focus on this as something more serious, I think that woke me up to what crypto was. I was fortunate that that happened in 2013 and not in 2023 or 2024. But even today, the vast majority of people haven't had that experience, haven't had someone sort of grab them by their shirt and shake them and say, "Hey, pay attention to this. This is a much bigger deal than you think." And I really thank Kathleen Moriarty for doing that to me, 12 years ago.
Absolutely. It's a blessing, I think, that we all wish we had gotten sooner than whenever we finally realized, right? Like someone just shaking us and be like, "You need to be paying attention." Like, it's like the Matrix a little bit. And you got to wake up and take that pill to really see what's happening. So I love hearing your story about it. I always love hearing everyone's stories about when they kind of officially got orange pilled themselves, and everyone seems to benefit,
Yep.
I want to talk about Bitwise a little bit. You've been there since 2018. From head of research to the CIO.
Yep.
How do you feel the firm has evolved in that time? And what part of that evolution are you most proud of during your tenure there?
Yeah, it's been amazing. When I joined, we had, I think, $2 or $3 million in assets under management. Today, it's north of $12 billion. So just we've grown from a scale perspective. And that's sort of wonderful because we exist to help traditional investors understand and invest in crypto. And the bigger we are, the more we can do. Right? For a while, it was just me managing the research and content and investment case. And now I have a whole team. And that means we can do more meetings with investors. We do 15,000 meetings with investors every year. And that's just amplifying the message, teaching more and more people about crypto. So that's been something that's been really pleasant to see. I guess, maybe the misconception I had, the most surprising thing, I knew Bitwise was a good bet. I knew its assets were going to rise over time. I imagined it being sort of a steady state rise up and to the right. And that's not what we experienced. What we've experienced is more like an exponential growth curve. It took us 3 years to get our first $100 million in assets. And now there are days where we get 100 million in inflows. And that's maybe a lesson as well, which is you can work really hard at something and show relatively little, but if you keep after it, eventually that will catch up. So that's been the most surprising, is it's more an exponential growth curve than a linear growth curve. But it's been a lot of fun. I wouldn't change a minute, and I'm more excited today than I was, 7 years ago when I first joined.
Yeah, and what you're saying actually echoes a lot of the sentiment I've heard from Jeff Bezos as well when he's spoken of Amazon. He's like, you can work in the shadows for 4 years, and then all of a sudden things will pop off, and then you see that kind of exponential growth curve that you're talking about. And it seems like a lot of the most successful people, especially who are in these new technological spaces, that seems to be the tail of the tape. And it sounds like you guys are no different in that regard. I mean, Bitwise, and correct me if I'm wrong, I believe I read you guys pioneered the first crypto index fund. Is that right?
That's right. Yeah, the first in the world, and today it's the largest. Yeah.
That's wild. So you went from the first index fund, crypto index fund, to now you manage billions. And for those that are new to the space, how would you describe Bitwise's mission and value proposition? How is that unique compared to others?
Yeah, so we're a crypto native company. We really care about this space, right? We invest in this space. We donate to Bitcoin open source developers, to Ethereum open source developers. Our mission is to help traditional investors access the opportunities in crypto in a safe, secure fashion. And so that includes products. An index product is a great product for a traditional investor because they don't have to try to pick and choose which asset to own. They can just own the group. But it also includes education. So a deep commitment to crypto. We really care about crypto. We think crypto will make the world a significantly better place. And the way we support that evolving into the world is by bringing in the largest investors in the world into the crypto market. So we do that in a million ways by writing content. I'm doing this interview from a hotel. I just spoke to a room with $500 billion in assets, talking to them about Bitcoin. And we're out there every day doing that.
I love to hear it. And, I was doing some research on you before our chat here today. And, you are one of the earliest voices who were pushing for a Bitcoin ETF based on my findings. And we kind of talked about the skepticism involved in a lot of these technologies and in this space specifically. What was it kind of like for you to stay the course for years while you were waiting for the rest of the industry to catch up and see what you had been seeing this whole time? Were there any times where that was frustrating, or did you just always know that was on the horizon and you were waiting for that moment?
Oh, it was enormously frustrating because you can't launch an ETF until the SEC gives you the okay. And, we made 33 trips to Washington, D.C. to talk to the SEC about our ETF. We're based in San Francisco. That's a lot of air miles. I have a favorite hotel in DC, a favorite coffee shop. I feel very at home there. It was an incredible, pushing a boulder up a hill when you didn't know how big the hill was. We were pushing it up for 4 or 5 years. But the thing about an ETF that's so incredible, the reason it's so valuable is it lets everyone in the world own Bitcoin in the same way as the largest institutions in the world. And I don't just mean that nominally. We have the Abu Dhabi Sovereign Wealth Fund owns Bitcoin ETFs, and so does my father at the same term, same price. Like, that's incredible. So we knew that this would really matter to the world. And sure enough, they've been the fastest growing ETFs of all time. But it was, Sisyphusian. I mean, literally hundreds of pages of research, hundreds of thousands of flight miles, and not knowing if you would ever get there. But eventually we did, and it's been worth it for sure.
I mean, the fruits of your labor are certainly seeming like they're paying off right now. And Bitcoin over 100K and doesn't seem to be stopping anytime soon. But in this space that was, again, we keep talking about the word skepticism. When you're in a space that a lot of people are doubting initially, what is kind of the mindset you have to have when you're navigating a space like crypto that shifts all the time and as fast as it does, and is often misunderstood by regulators and the public themselves? Like, what is the mindset you're at? Are you just always trying to go out there and educate people so they can see what you're seeing? Or is it just take some really thick skin? Because I'm sure there were people at the beginning being like, you're out of your mind, right?
Yeah, it's a great question. There are really two things. So first, you have to have a fundamental confidence in it. And that means understanding it at a first principles basis, reading the Bitcoin white paper, really understanding why it's a fundamental technological advance. Because if you're going to do this for multiple years, there will be periods where you'll ask yourself, wait, am I off base? Is this real? So you have to have that fundamental understanding, and then you have to be willing to tell the same story literally 1,000 times with the same level of energy. I have given the Bitcoin or Crypto 101 presentation over 400 times in the last 7 years. The thing that gives me a great deal of confidence is the same thing was true in ETF. So I was the CEO of ETF.com. ETFs today are the most common form of investing, $15 trillion. But when we started ETF.com, people were very skeptical. They labeled them weapons of mass destruction. Major Wall Street firms wouldn't launch ETFs. There were congressional hearings about ETFs being a threat to the American dream. And the same rule applied. I understood it at a fundamental first principles basis. I saw the benefits, and I gave an ETF 101 presentation 1,000 times. If I and all the other great speakers in Bitcoin have to give Bitcoin 101 presentations another 1,000 times, we're going to do it. And if you keep doing it, you'll eventually get to where we all want to be. So that's been sort of the mindset, and it's been working out.
When you were giving these presentations over and over and over again, I'm sure you're having to dispel certain myths about the industry. Was there anything in particular, like any questions you were getting over and over and over again? Was it people always saying, this is internet magic fund money or monopoly money? Or what was like the one thing people were always pushing back against you as you were trying to educate the world about this new financial revolution?
Yeah, we still get those questions. There are questions about criminal use. There's questions about environmental impact. There's questions about, why can't we just create a new version that will be just as good as Bitcoin, or why there are only 21 million? The biggest one, the one that is in the back of people's heads is, why does this have any value at all, right? They can't touch it. They can't put their hands on it the way they can something like gold. And I think a lot of people just struggle with, why does this have any value at all? There's a way to, I think, get people over the hump there, but we heard lots of FUD questions, but that was the one I think that was at the core of it that really challenged people. How does this non-tangible thing, how is that worth, a couple $1 trillion and on its way to $20 trillion? That's been the hardest one, but there are good ways to get people over the hump.
I would love to hear your short explanation of that, because I've been in this space since 2016. I used to have my own little Bitcoin miner and stuff, and people, friends and family were like, you're out of your mind. And I would always tell them, like, listen, they would say the same thing that you would hear. What is the intrinsic value that this holds? And I would say, well, value is determined by whether or not people think it's valuable. Look at fiat currency. It's really no different than that. And this just holds value because people have decided that, like, hey, this is valuable. You probably have a much better explanation than I do. So I'd be curious, what was your pitch to people when they would ask you that question?
I think that's a pretty good one. I'll say what I say, which is that Bitcoin provides a service. The service it provides is the ability to store wealth in a digital format without relying on a government or a bank. Some people don't want that service, but evidently hundreds of millions of people do. And if you think about a service, it sort of solves this problem, right? Microsoft offers a service, the ability to do word processing or Excel documents. If more people want Microsoft Word and Microsoft Excel and Microsoft, video and Teams, the value of Microsoft goes up because people pay a fee for that service. The same thing is true of Bitcoin. If more people want this service, the ability to store wealth in a digital format without relying on a bank or a government, the value of Bitcoin goes up. If fewer people want it, the value of Bitcoin goes down. The only difference is you can't pay a fee to Bitcoin because there's no Bitcoin corporation, there's no Bitcoin CEO. The only way you can get this service is by buying the asset. If you buy Bitcoin, you get the service. If more people want the service, the value goes up. And I think once you start talking about it that way, as a service, and not this, mythical internet money, but a service, just like Microsoft or Salesforce or any other service we provide, you can see that the economics are the same. More demand, more value, less demand, less value. And what we've seen over the last 15 years is sort of 15 years of more and more demand for this service. And I think we're going to see another 15 years of that in the future.
I love that. I hope you don't mind me stealing your elevator pitch. I think yours is
All
a little more
yours, all
effective than
yours,
mine.
all
Now,
yours.
at Bitwise, you guys have pretty much pioneered the ETF market in this space. But now we're seeing other players emerge. BlackRock and other incumbents have entered the ETF arena themselves. Was that competition to you guys, or is that validation? Or maybe is that both?
It's definitely both, right? BlackRock, for instance, has done really well entering the market. They have actually the largest Bitcoin ETF, and my assets are up 10x since they entered the market. So I'll take it, right? I mean, why does it matter? Why does it matter? It matters because BlackRock is a trusted name, right? They're the largest asset manager in the world, and they're saying that this thing has value and it should be in most investors' portfolio. That so dramatically expands the market that I don't mind that I get a smaller slice of the pie. It's a 100x bigger pie. So all of these companies coming into the space, of course, I want to beat them and earn my market share, and we compete head to head. But we're also sort of all friends, all saying the same thing, which is, look, this pie is going to be 10x, 100x bigger. There'll be room for everyone. So I'm glad that they're here.
Yeah, it's certainly seeming like there's going to be plenty of room at this table for everybody to eat, especially as time goes forward. I mean, Bitcoin's only around that $2 trillion market cap mark right now. I mean, and I've heard numbers as high as like, I think 200 trillion potentially if certain things happen. And with all of these new players starting to enter the space, the BlackRocks of the world, et cetera, what do you feel like differentiates you at Bitwise from other crypto asset managers? Where do you think your edge lies in this forum?
Yeah, I think there are two places. The first is that we are crypto native and we do care about Bitcoin as an example. So our Bitcoin ETF donates 10% of its proceeds to Bitcoin open source developers who maintain the network. We're the only crypto ETF provider that publishes all of our wallet addresses. So you can go on chain and see that we have the $4 billion of Bitcoin that we say we have and where it's located. And I think for many parts of the crypto native audience, they want to align with an asset manager that shares their values and supports this network. So that's one way that we do it. The other way is we do, I think, one of the best jobs in education in the crypto market. So when we talk to traditional investors, they know that we have a 7-person research team, a 20-person distribution team, and that will be focused on crypto exclusively, whether it's up, down, or sideways. We've been doing this for 7 years. So, BlackRock's going to get their share of investors who know and trust the BlackRock name. Fidelity, the same. But many people want to align with a specialist in the crypto market. And I think we're arguably the specialist in the crypto ETP market. There are some others that also do a good job, but I think that's the niche that we provide. And I think that's going to be a valuable part of the spectrum going forward.
And with education being such a fundamental part of what you do at Bitwise, you interface with a lot of different folks, right? Regulators, institutions, and just crypto natives. Do you feel like you have to approach that educational practice differently for each of those? Like, how nuanced is that, and how do you build trust across such different audiences, especially when you're trying to educate them all a little bit differently?
Oh, absolutely. You have to use different language, different words. You can lose a traditional finance audience instantaneously if you use like certain crypto buzzwords, right? They'll just tune you out. They don't want to hear it. Even words that we say in crypto as if they're nothing, like decentralized, really is not a term that a traditional financial audience has ever thought about. You have to explain why that's valuable. So there's definite tailoring of the message to different groups. You have to think about how deep you go and where you hit them. And we try to be able to hit people at each of those phases, right? We can talk about Bitcoin's core development pathway with crypto natives, or we can zoom out big picture and say why it makes sense for the US government to own Bitcoin if we're talking to a traditional investor. So you have to be able to hit them at different levels.
Are there any of those kind of buzzwords that you just have to avoid across all of those different audiences? Like you can't say like Pepe coin or fart coin or something like that, and they're just like, I'm out, sorry.
Yeah, I think Fartcoin would send them running for the hills. I do find that most audiences I speak to find meme coins toxic. and you have to talk to them about, why that is and what the real value there is. But yeah, you can't really talk about fart coin. I think that'll get you booed off the stage, or maybe not invited back if you do.
Yeah, understandably so. And while we're on the subject of meme coins, I would just be curious. We've seen Trump coin come out. Do you have any feelings on that one way or the other? I mean, it's great. I think the current president, new president, is doing great things to promote regulation in the crypto industry, which I think is a huge boon. I think we can all agree on that. But Trump coin, I don't know. I'm not really sure how I should feel about it. Do you have any opinion on that one way or the other?
Yeah, I do. I don't love it. I don't love it for the crypto industry. I wish they were focused more on broad regulation. My general view on meme coins is meme coins are fine as long as there's not an asymmetric relationship between the insiders and the public. In other words, as long as the insiders don't know something that the public doesn't know, don't know how long these tokens are locked up for, or will they be sold on the market on day one. That's really the thing we need to fix in meme coin. I'm not going to go out and buy a meme coin, but if you look at something like Doge, I think Doge is fine. There's no insiders. It's a coin with a dog. There's nothing more to know. You may think it's going to go up. I may think it's going to go down, but there's nothing wrong with that existing. The challenge with Trump coin and some of the more recent meme coins is sometimes the insiders have an advantage over the public. And that's where I think we need to sort of stop that as an industry through sort of self-regulation, or people will stop it from the outside with regulation. That's really my challenge with many of the meme coins that we've seen over the last year, is that insiders have an advantage, and I don't like that. So I wish Trump coin didn't exist, but it is good that the current White House and current administration is pro-crypto. It's a very important change and a very positive development for the industry.
Yeah, the whole Trump coin thing feels like a 2 steps forward, 1 step back kind of situation. It's like, hey, we're going to promote crypto regulation, great. And then we're like, hey, well, we got a coin the president is endorsing that you should buy. And we're like, oh, and that's going to turn some people off, at least in the short term. But, meme coins usually find their place eventually, and that's in the dumpster. So we'll see how this one plays out. I don't know. Now, I saw in a previous interview you did late last year, where you were talking about your predictions for Bitcoin in the upcoming year. We're in what should be the better half of the halving cycle, the quote unquote bull market, which may or may not be a thing anymore. I don't know. I'd love to get your opinion on that. In that interview, you mentioned you could see a price of 200K, and this was before Donald Trump reinserted himself back into office. Is your prediction on Bitcoin still the same, around that 200K mark? Is it maybe more or less based on things we've experienced in the first 4 or 5 months this year?
Yeah, I'm still at 200K. I think there could be upside above that. There's a very specific reason for why it's 200K as well, which might be interesting. The criticism of Bitcoin is that its price is set by supply and demand, but that's also the benefit. And so we just look at the supply demand characteristics of Bitcoin. We know that the Bitcoin network will produce 165,000 Bitcoin this year. And then we look at ETFs, which bought 500,000 Bitcoin last year, and corporations, which bought 300,000 Bitcoin, and governments, which we think could buy hundreds of thousands of Bitcoin. There's just more demand than there is supply. And we think eventually that has to force the price up to the point where existing holders are willing to sell. We've seen Bitcoin's price sort of trade sideways around $100,000. I don't think that's a mistake. People are people. They're willing to sell at nice round numbers like $100,000. I think eventually, because there is endemically more demand than supply, we're going to exhaust the people willing to sell above $100,000. And then you have to ask yourself, where's the next point where they're willing to sell? Is it 150? We think it's 200. It could be 250. But as long as you have ETFs, companies, and governments overwhelming the Bitcoin market with new demand, you're going to force existing holders to sell. And so you have to ask yourself, what level will they sell at? They've been selling at 100. I think they're going to get tired of selling there. And then it goes higher. And our prediction is it'll stop around 200K this year. But I think there's a possibility it goes even up to 250 if these sources of demand remain as strong as they've been for the last 5 months.
Oh, I hope you're right. I've got that green Lambo circled in my bookmarks. Now, with all of these companies now coming out with new financial products, specifically in the Bitcoin space, where you can borrow against your Bitcoin and you never have to sell it, do you feel like that's going to have any effect on people actually even being interested at selling their Bitcoin, that it could cause even a greater supply shock? Because everyone's like, why would I sell it? I can borrow it against it at a reasonable rate, with an asset that's appreciating unlike any other in modern history. Do you think that's a possibility, or I'd love to get your thoughts on that?
I definitely think that's a possibility. Bitcoin whales need to eat. So they need to pay their mortgage and they need to buy groceries. And that's one of the reasons you see selling over time. And to the extent that we're financializing Bitcoin, I think that will encourage more people to just hold on for the long term. We get a lot of inquiries from people with large amount of Bitcoin who wonder, how can I generate a 5% yield on my Bitcoin? In the past, maybe that was by selling 5% of your Bitcoin, right? Today, it may be by doing option strategies, it may be by lending. So I do think that further constricts the supply. I really think when you dig into the supply demand numbers and you just put them on paper, it's pretty shocking. There is this big mismatch between new demand and supply. That doesn't guarantee that that will continue, right? The new demand could weaken. There could be news events that cause it to disappear. But right now, this new demand is just massive. And as you mentioned, things like lending and option overlay strategies are maybe even encouraging people to hold on to their Bitcoin longer and further shrinking available supply. It's an incredible setup.
It really is. And while we're talking about supply, I'd be curious, at Bitwise, do you analyze the numbers based off of that $21 million hard cap? And the reason I ask that is because there's speculation that there could be anywhere between 1.5 to up to 4 million Bitcoin that have been lost that will never be recovered. I'm sure you heard of the guy that had all of them on his hard drive that got his wife or something put in a dumpster and he's trying to get it back. Do your numbers, is that baked into your guys' numbers, or is that just going to be a really happy surprise for us as we go down the line and realize that supply is actually even less than we thought?
Yeah, I think it's a really important take. This actually goes back to how we speak to different audiences. When we speak to crypto native audiences, this is something that we bring up all the time because many people's price target for Bitcoin involves taking the market cap of gold and dividing it by 21 million. And you can say, actually, you should divide it by 18 or you should divide it by 17 because there's the Bitcoin that's lost. There's Satoshi's wallets who, is not going to move the Bitcoin anytime in the future. So you can get down to 17 million as the max supply. When we talk to traditional investors, that's a layer too much complexity. We stick with 21 million because you just want to keep it simple for them. But I think you're right when you're talking to people who are more crypto native that the real available supply is much lower than 21 million. It may be 17, it may be 16, it may be 18, but it's in that zone. And I think it's a great point.
Yeah, and we're going to get a little more serious here. We have to address an elephant in the room. A very terrifying development recently happened in the crypto space. Jim Cramer of Mad Money recently said, "Let her ride," when talking about Bitcoin. And as someone who lives in the data, do you respect the take, or is this just a terrifying thing in the terms of the inverse Jim Cramer law? Because I'm scared out of my mind now, and I was feeling very bullish before that take.
Yeah, you just told me this. I have to go find a new job now. So thanks. I got to get into a new industry. Don't fade the inverse Cramer. I mean, that's one of the strongest, best track records in finance. So that is a little bit scary. You're right. That is a little bit scary.
The only thing that might be stronger than inverse Cramer is copying Nancy Pelosi trades. She seems to be the true oracle we've all been waiting for. But
that's right.
Neither here
Set
nor
aside, no Ray Dalio, no Stan Druckenmiller. It's all Pelosi.
That's right. She's a genius. I don't know how she does it.
She's a genius.
No. While we're talking about Bitcoin, we have to talk about what I like to call our Lord and Sailor, Michael Saylor. He now owns more Bitcoin than most countries. Is he a visionary or just the world's most expensive form of dollar cost averaging? What do you think?
Wow, what a framing. I mean, he's a visionary. If you go back to when he first made this transition, he was the first person to do it. He did it with incredible conviction. As it started to pay off, he's doubled down. They've done some very innovative things from a financing perspective. And now, a visionary also proselytizes to others. Now there are 100 publicly traded companies that own Bitcoin on their balance sheet. I think that'll be 1,000 in the future. I don't think we would be where we are today without Saylor and his conviction and his ability to articulate that case. You need many voices to lift something like Bitcoin up. Bitcoin, remember, has gone through this incredibly unlikely journey from a small technology idea to an asset that's held by governments around the world. That's an incredible journey. You need a lot of voices to do that, but Saylor has been, one of the most important, and I think will continue to be. So put me on the visionary side of that dilemma.
Yeah, I think I'm going to have to agree with you on that one. And you probably heard he recently came out and said that he does like 75 to 85% of his analysis using AI. And you're on the board, I think it's Equibot, and it's an AI-powered investment firm, right?
Yep. Yeah, absolutely.
Do you feel like AI makes investing smarter, or is it just faster at being wrong? Like, what do you think? AI is a hot topic right now. I got to know.
Yeah, look, I think it's a necessary component of any investment process because it gets you to a certain base layer. We're still at the point in AI's development where you need human intelligence on top of it. So it's not perfect. I don't think an AI bot running on its own will reliably outperform all markets in all conditions. We're trending in that direction. But if you're doing serious investment analysis and you use zero AI, you're either being extraordinarily inefficient or more likely extraordinarily foolish because it can digest just so much massive information. You take a firm like Equibot or Quantum Street, it's digesting effectively all the financial information in the world, all the social media information in the world, all the news stories in the world. Before 5 years ago, maybe JP Morgan was doing that. And now a startup can do that, right? That's a remarkable switch. And that means that if you're not doing that, you're at the kind of a disadvantage that a retail investor was versus JP Morgan 10 years ago, right? That was a sizable disadvantage, or maybe against Bridgewater. Now the bar has been raised. So AI is necessary. It's probably not sufficient at this point, but it's trending in that direction.
Yeah, it seems like today it would be almost impossible to even compete without integrating AI in some form into your workflows, right? I mean, it supercharges everything.
It supercharges everything. Yeah, you'd be a dead man walking. There's no way. You can't do it because that's the bar, right? And then you can add creative genius above it, right? That is what we're seeing is you still need to add that extra element above it. But if you're not there, right? If you're trying to do this from the ground zero, it's like, it's like building a house with, I don't know, with no tools, right? It's good luck, right? Almost impossible. So I do think that's the new base layer. And I think every firm, they're still catching up, honestly, but every firm is going to get to that point where it's a fundamental part of what they do.
Yeah, absolutely. As someone who's really at the tip of the spear of things right now, are there any metrics that you personally watch that maybe most retail investors are overlooking right now, but maybe should take a closer look at?
That's a great question. In the crypto specific space, we keep a very close eye actually on momentum, which is a very simple statistic, but has some of the best explanatory power in crypto in terms of short-term return forecasting. So that's maybe not that exciting a thing to say, but it's something that I think so many crypto investors overlook that I have to raise it. Beyond that, I really think when you think particularly outside of Bitcoin, you need to look at overall transaction activity as the primary metric that you're looking at. And we've seen that, for instance, in the Ethereum space, if you bundle L1 and L2 activity, it's really gone up substantially. And I think most people are not paying enough attention to that. That's the canary in the coal mine that we're moving in the right direction. The other thing I think about is developer activity on these various blockchains. I think that's a real indicator of where the market is going as well.
And you mentioned Ethereum, and I'm so glad you did. I watched an interview talking about how you think this year Ethereum could be one of the best plays in the market. What do you think has been going on with it this year? We, usually would move in accordance with Bitcoin. Bitcoin soared, Ethereum stayed flat. Now we're seeing a little bit of a bounce back in the most recent week. What's going on there? Do you have any insight you could share with us?
Yeah, absolutely. So, there are two things that happened to Ethereum. One is that they slashed fees on the network. So the revenue of the network fell by like 95%. The reason they did that was because the transaction cost to participate in the network was way too volatile. So they built these layer two networks, which dramatically drove down the cost of executing. When you do that as a technology, when you drop your cost 95%, you need to see your use case uptick dramatically. And that is happening in ETH, right? As I mentioned, it's up about threefold over the last 24 months. That's pretty good, but it needs to be up 10x. And I think the market is impatient as it waits to see Ethereum, quote unquote, make it up on volume. The other thing that was challenging Ethereum is that the Ethereum Foundation, which supports the network, sort of had an academic-y feel. They weren't reactive to what was happening in the market. They weren't shipping fast enough. They weren't caring enough about competition. They weren't focused enough on UX. One of the reasons you've seen Ethereum bottom and start to rally is that the Ethereum Foundation got religion. They changed their leadership. They focused more on execution. They're saying the right things. I think Ethereum is a unique contrarian opportunity in crypto. So much of crypto investing is chasing the latest hot dot. The thing that's interesting about Ethereum is the price is down substantially, but it's still the leader in stablecoin activity. It's still the leader in tokenized real world assets. It's still the leader in agentic AI. And so you have a low price, but I think improving fundamentals. And that's a pretty interesting thing. Value investing in crypto are not words that go together very well, but I think there's a case to be made that Ethereum is sort of a value opportunity, at least for a sort of a near-term bounce.
Do you feel like that NFT crash a couple of years ago had anything to do with it? Were people kind of turned off by that? I know I paid way too much in gas fees for my NFT frogs. So could that have had anything to do with it, or what do you think?
I definitely think that was part of it. I definitely think that was part of it, right? You can't build a business if the cost to transact varies from a penny to $100, right? Imagine if you
Right.
went into your local grocery store and some days they charge you a penny to go in, and some days they charged you $100 to go in. You would never go in, right? You would order it from a different store, or you would have it shipped to you. And that was sort of the Ethereum case. So I do think people felt that. And on the other side, you have this other chain, Solana, which was executing very well and which was
Yeah.
easy to use and which had reliably low cost and which had a vibrant community. And it also suffered from that comparison, right? Because people looked and like,
Mm.
why are you more like this? It's like you have two kids and one is getting straight A's and the other is getting C's. And you're like, why can't you be like your brother? And I think that
Oh,
was
I feel
happening.
attacked.
Yeah, yeah, yeah. My kids, when they watch this, they'll complain, you're talking
They
about
will.
me. But yeah, I think that was part of it. I think that was part of it. But look, I think both chains are doing well for what it's worth. I think we're going to see a rebound in that space in the latter half of this year. I think there'll be institutional interest in Ethereum, Solana, and other programmable blockchains. So I'm bullish on that space as well.
Yeah, me too. I think long term, you see these hiccups, and I think that's just another one along the way. The whole pump.fun thing clearly hurt Solana, and I think the whole crypto industry in the short term as well. But that seems to be the way these things work. We see a step back every now and then. So it is what it
That's
is.
You mentioned it earlier, like two steps forward, one step back. That is the painful part of being part of crypto.
100%. So, Matt, I know you're a busy man, so we got one more question for you, and we'll let you go. I want to close this out. What's one 2025 crypto headline that you fully expect to see, even if it sounds ridiculous right now, and you get bonus points if it involves Elon Musk or a nation state?
I'll take the nation state bait. I think the US is going to buy more Bitcoin this year. I think the US is
Mm-hmm.
going to increase the amount of Bitcoin it holds on their balance sheet. I think that's going to happen. If I was more creative, I'd come up with a fun one with Elon Musk, but I don't have that. But I think that'll happen. Look, I think crypto is going to be the best performing asset class in the world this year, as it was, the previous year and the year before that. I think this bull market has significant legs. So I'm probably not being bullish enough if I'm being honest.
Oh, those are the best words I could have ever heard to cap off this interview with you, Matt. Thank you so much for your time today. It was truly a pleasure. And if our audience at home wants to learn more about you and everything you guys are doing over at Bitwise, where can I send them?
Yeah, sure. Find me on Twitter, Matt_Hougan. As we were chatting, it's Hougan, which is weird, but what can you do? It's the name I was given. Or you can come to bitwiseinvestments.com. I have a memo I write every week. It's 500 words or less. It's called the CIO memo. So search for that. You can sign up for it, and you get my best thoughts of the week every Monday.
Love it, Matt. Thank you again for your time, and we appreciate you shaping our financial future. Keep up the good work. We loved having you on the Blockchain Report. Hope to have you back sometime.
Thanks for having me. This was fun.